Hi, Greg Lewis, MetaStock Software. In just a moment, you're going to watch a presentation by Robert Deadman and Jeff Gibby regarding the Ichimoku Method. This is a really popular method for us right now, and a lot of people have a lot of questions about it. And Jeff and Robert do a great job of discussing it and going through your questions. Hey, if you'd like a free 30-day trial of MetaStock, click on the link provided. Also, you can get $100 off the Ichimoku Method add-on that Jeff and Robert discuss in this presentation. Finally, if you haven't yet subscribed to our MetaStock channel, please take a moment to do so. And if you have any comments or questions, don't hesitate to leave them in the comment section below. We get back to all of them. Thank you so much and enjoy the presentation.
Hello everybody, it's Jeff Gibby here. Joining me in the office is Robert Deadman. Want to say thanks for coming. Welcome to the webinar room and welcome to another webinar. Promise to make it great. Let's go ahead and kind of get to the first part of it, and that will be our legal disclaimer. So give me just a second. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk that's inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So I want to just ask the question, make sure you guys can hear me okay. If we're coming through and the sound and the audio is good, just type yes, put it in the comment field. Want to welcome you. I hope everybody is having a good holiday season. Hope everybody that's here in the U.S. and celebrated the holiday just got puffy full last week. And welcome. Thanks for coming out today. I'm joined in the office. Thank you, Ben, Walter, James, Mark, and Plessy. Appreciate you letting us know you can hear us. I'm joined in the office by Robert. Robert, why don't you say hi?
Hey.
Robert, I usually give a little bit of a bio for you and a little bit of an introduction, but I'm going to be honest, I feel a little bit lazy right now. I'm going to have you introduce yourself. What do you want to tell us about yourself?
I've been doing things in the markets for coming up on 30 years now. As far as research, been fairly heavily in the markets for the last 25. Just
what do you like to trade?
Right now, I am a big fan of Forex and have been for about the last 5 years.
Okay.
I like the liquidity of it. I like how quick it is to get in and out, and it's just something that it's very comfortable. I really like the trends that you get. They're very nice and smooth, and so that's kind of what I'm a big fan of at the moment. But historically I've traded stocks, options, futures have been the main things. Never traded bonds, I'll be honest. Never done that.
Now, Robert, you have a bit of an interesting career with MetaStock as well. You used to work here, right?
I worked here. I originally had become an employee here back in '96. It was right after Reuters had purchased Equus, and actually I was here up until the beginning of 2001.
Okay. After that, Robert left. He does a lot of programming projects. As you can see on the screen, he's written quite a few add-ons or methodologies for MetaStock, including our best-selling add-on of all time, the Performance Systems Plus. So one of the things that I'll say about Robert particularly is he knows how to make an add-on. His experience here at MetaStock kind of really give him I would say pretty good insight into what customers actually want when they're looking at an add-on, and that's why Performance Systems Plus did as well as it did. It's by far our best seller. We just looked at the numbers a few minutes ago. So over kind of the genesis of the project that we're going to talk about today is kind of interesting. I met with Robert. I ran into him at the Traders Expo last year. Was it last year?
A year ago. Mm-hmm.
And he said, I kind of want to develop another product. I'm like, well, your products do really well. I'd be interested to see in what you want to come up with. And he created the program that we're going to talk about today, which is the Ichimoku Master. So in any case, that's kind of a little bit of a background on him. I think that's a pretty interesting way to start it. You did a pretty good job. I'm going to let you kind of take over the controls here, and Robert's going to just talk a lot about what the Ichimoku Master is. So,
well, before we actually get into Ichimoku Master itself, we really want to get into what Ichimoku is and how it works. One of the things about Ichimoku is these days it's pretty much brought into every piece of software out there, and you know that's great and it's wonderful, and people use it and it's become very popular. Ichimoku was created, I should say created over many years, but released to the public back in about 1968. It was something that the person who was developing it, he was a journalist who had interns that kept looking over charts, trying to figure out what worked and what didn't, and over the course of actually a couple of decades, came out with this methodology which they called Ichimoku. And in it, the idea was to create a trend-following system that worked on a set of indicators that at the time were pretty much developed around the Japanese trading markets. And I say that because Japan was trading with 6 days in their markets, not with 5 like we do typically in the United States or in Europe. With a 6-day market, he had optimized everything around that. Now, the thing which is interesting is that people in the modern day always are talking about trying to change it and improve on Ichimoku, and almost everybody comes back to the defaults. So it turns out what he figured out should be great for the Japanese markets of a 6-day week works just great on the U.S. markets with a 5-day week. People tend to just say, you know what, we leave it alone because it works so well. And like I said, it was released in 1968. People have been using it consistently. Next year it'll be 50 years that people have been using it. And more importantly, people are still touting it as one of the best things that they've ever seen today. It has held up the longest. It's kept its profitability and its consistency, and so it's become a very popular mechanism. And I'm going to have Jeff throw up the picture of the creator there for us.
all right.
So this is the guy who actually created it. He goes by Ichimoku Sanjin. His real name is
Goichi Hasada.
Goichi Hasada. I always mangle the name, so I choose not to say it if I don't have to, because I'll often mess that up. But like I said, he went ahead and released it, and it's like I said, it was brought actually over to the U.S. It started being used in the U.S. at the very end of the 90s, and really started picking up in the 2000s. And like I said, it's still just heavily used today, and it's incredibly consistent. So I'm going to go ahead and take you through a walkthrough of what it actually is so that you can have an understanding. And what we see right here is very typical of what we would see in an Ichimoku chart. We see 4 pieces of information. There's actually 5, but it's being displayed as 4, and I'm going to walk you through those pieces. So the first thing we're going to have is what we see here is this green indicator on the chart. Okay, this right here is what we call a Tenkan-sen. Now, remember I said that Ichimoku is a trend-following system, which means it's going to be doing some things very similar to what you see in other trend-following systems. And certainly in the West, one of the most common things that is known in trend-following is the moving average. The idea is to be above or below some moving average value. Well, this works very similar to the moving average, except instead of it being a moving average of closing prices, what you're actually seeing is a midpoint of a certain amount of time. In the case of the Tenkan-sen, what you're seeing is the midpoint of the last 9 periods of trading. So in this case, if you look at, say, this bar here, if you go back for the last 9 days, This right here represents the midpoint of those values. So rather than it being only on the closing prices, which tie very closely to a price, being the midpoints means it moves a little bit slower and has a lot of these flat positions that hold on. That's actually a very important part for how Ichimoku works. Not as much as what we're going to see in the Tenkan-sen, but for the next part that we're going to see in the Kaijin-sen, which is this purple line here. This is the second part. The Kaijin-sen is the same as the Tenkan-sen. It's a midpoint, but instead of it being a midpoint of 9 periods, it's a midpoint of 26 periods. And the reason why is because 26 periods is how many trading days there would be in the Japanese month. How we usually have 21 to 22, because of them trading on the weekends, their average was 26. So we have this Kaijin-sen, which is a midpoint of the last week and a half, or I'm sorry, the Tenkan-sen, which is the midpoint of the last week and a half, and the Kaijin-sen, which is the midpoint of the last month, but in this case it's a little bit more because we're in Western markets. So 26 periods. Now, one of the great things to look at in that is its ability to act kind of as a support or a resistance line. As you'll notice, it has these flat markets, which is exactly what it's supposed to do. And these act as those support lines that will then keep shifting up. So the best way to look at the Kaijin-sen is as a dynamic support and resistance. Being dynamic, it will go ahead and change and adjust with the pricing. So as we see here, it goes ahead and mixes in, the price mixes in with these two, leads up again, and then this acts as this great support level, even up to here where it shows, yes, it's trying to come down, bounce out, come back, and break through. At the top here, we actually see that it's kind of used as a support level several times before it finally breaks through. Once it breaks through, it's now using that as a resistance level. It's amazing how well and consistent that has worked for this over so many decades. Those are the these two indicators here. So that's 2 of the 5 main components. This next part, the next component, is what we see as the cloud. And this is actually made up of 2 indicators, what we call a Kinko Span A and a Kinko Span B. Now, the Kinko Span A is, this is going to get a little bit different. It's going to be the midpoint between the Tenkan-sen and the Kaijin-sen, so the midpoint between there, and it's going to be shifted forward 26 periods into the future. And that seems really odd to be going and shifting something forward, but it uses it as a concept of forward looking for the information. That creates a fast line for this cloud. The bottom part, or the other part, the slow-moving component, is the same as the Tenkan-sen or Kaijin-sen. It's going to be, instead of a 9-period or 26-period midpoint, it's going to be a 52-period midpoint. But then it's also shifted 26 periods into the future. By doing that, it creates this difference between these 2 indicators, which we now look at as the Ichimoku cloud. Another word for this is what's called the Kuhmo, and that you might have heard that term. Kuhmo in Japanese means cloud. This is an area that's considered to be an equilibrium area. This is the area where prices are going to want to come back to at some point and be in. That's where it considers to be its centralization. So Ichimoku looks for movements away from the cloud and then considers time back in the cloud to be a waiting point, waiting for something to change in that equilibrium. Now, one of the things I said is that it's also shifted 26 periods into the future. And because of that, we see that while prices may stop here, the cloud itself is projecting forward to give us some information about what's going on, or at least what the expected action is that we're looking at seeing. We see up here it was going up, and then it changed directions here, and then we see the cloud changing directions up here. Something though to consider though is because this is an equilibrium point, any time that the price is within the cloud and its area is time that you actually shouldn't be trading. It's time, since it's an equilibrium, there really isn't any information as far as trend that it considers to be valid at this point. It's waiting for trend to build up and for trend to develop. So that's going to be, so now we've got 4 of the indicators. Now I'm going to show you this last one here. And this is one that confuses a lot of people, and yet other people also consider it to be the most powerful indicator in the group. This is something called the Chiku Span. And what it is it's the closing price shifted 26 periods back. And that seems so simple, but it has a very powerful use. Now the other sections, the Taiken-sen, the Kaijin-sen, and the Kuhmo are all things that you look at that contribute to an entry. One of the things, though, about the Chiku Span that's different is it's primarily used as a filter to keep you out of trading as opposed to get you into trading. You do want it to be on the side of price that you're trying to enter in your trade, but more importantly, what's being looked at is whether or not this shifted back price is playing with the price at that time, except it being shifted back causes a lot of confusion. Now, if you're always looking at the end of the chart, it's usually not going to be that confusing. So, for example, if we're always looking at this spot here, we can go back and say, oh, well, here's where the Chiku Span is, and we can see in this case it's above price. It's above price for that point. So we're using this information here to determine whether we should actually place trades up here. The other part is we're looking for a little bit of stuff up here to determine whether we should also be placing trades. So it's trying to be forward-looking and backwards-looking. The reason why you want to be this, or you don't want this to be in tide with price, is because the philosophy is if the price 26 periods ago is approximately the same price that it is now, it's not really moving. It's not really in a point to be truly dynamic. So you want to be involved in trends, and this suggests that it's not really in a trending state. So it uses that as a filter to stay out. So that's some of the basic components of Ichimoku. However, in looking at Ichimoku, one of the biggest problems that people have working with it is in how it is looked at historically, and people who try and learn Ichimoku by looking at past data. What ends up happening is that people's brains get fooled into thinking different things, and so they'll often have to do the wrong, or they'll make the wrong decisions. For example, if I were trying to evaluate what should be going on here, I would technically be counting back here to see what's going on with the Chiku Span. But what ends up happening for so many people is that they start looking at where the Chiku Span is on the bar that they're looking at. And Chiku Span really means nothing on the bar that you're looking at. It means something compared to the bars 26 periods ago. Same thing as if they're looking for the cloud, they're wanting to know where that actually is. And a lot of times, especially when you get into areas around here where you're trying to count how many bars forward or backwards to figure out where you are. Fortunately, what we're going to show you in Ichimoku Master will fix a lot of that and make it so that you don't have to pay attention to that. But for this part right here, we just wanted to show you how Ichimoku looks, how it's calculated, some of the basic ideas behind it, and what it's representing. There is aspects about trading it, and there's some general basic signals that occur with Ichimoku. The two main ones, one of them is called a TK cross, and it's where you have your Tenkan-sen crossing above or below the Kaijin-sen. And the other one is the closing price in relation to the Kuhmo, okay, in relation to this Ichimoku cloud. So those two signals are well, let's talk about the TK cross first. The TK cross is basically inferring that you want to have the fast one, the Tenkan-sen, be above the Kaijin-sen if you're trying to look for long positions, or it be below it if you're looking for shorts. That seems pretty basic. That's a lot of the same process as a moving average crossover, except in this point we're using the midpoints. The other part, though, is where the price resides in relation to the Kuhmo. So, for example, if the price is above the Kuhmo, we would only want to take long trades. If the price is below the Kuhmo, we'd only want to take short trades. So we consider it to be, at this point, a long trade, and we want it to have the Tenkan be above the Kaijin. So as a quick example, not necessarily we would ever trade like this, but just as a quick example, here we would see that we'd want to be long in this area. Here, the Tenkan-sen crosses below the Kaijin-sen, even though price is still technically above the Kuhmo. Over here, we wouldn't want to be trading again until this part here where the price crosses, or where the Tenkan crosses above the Kaijin. And so now we've got the TK cross is now positive, and the price is above Kuhmo. So that would be what we'd want to be looking at for our two main signals. Other signals then become secondary. We want to use those as confirming signals or as filter signals to keep us out. So those are some of the main components that we look at when we look at Ichimoku. Now we're going to show you about using it on a MetaStock chart and what it looks like with Ichimoku Master. Now with Ichimoku Master, this template is included, and one of the things that you'll notice is it's not plotting past the end. Now, because of that with MetaStock, it doesn't really plot past the end of the data, and so a lot of people haven't really used Ichimoku with MetaStock before. That's kind of been a little bit of a hindrance. But fortunately with Ichimoku Master, we include this template, which what we do is we show another window up here that says this right here is the closing price up to the end. So this part right here matches this part right here. And then we can see the projection going forward of that Kuhmo. So from that, we can now represent all the same information that we would see on anyone else's Ichimoku chart. That's really helpful, really useful. That's really kind of simple because a lot of the aspects of Ichimoku Master make it so you don't ever have to actually look at any of that. So what we're going to do is show you exactly what Ichimoku Master is doing. We're going to go ahead and apply the Ichimoku Master Expert Advisor. Now, when we look at this, we will notice that there are three different expert advisors. We have a complete, a description-free, and a minimal. And they're really based upon how experienced you are with Ichimoku Master at that time. They all contain kind of the same information for trading purposes, but some have more educational or informational information than others. So we're going to go ahead and start with the complete so that you can see everything. We're going to go ahead and attach that, and immediately what it shows you is, immediately what it shows you is this right here, the price for wherever this is green is the price is above the Kuhmo, and for wherever it's red, the price is below the Kuhmo. That gives you immediate signal to tell you where price is in relation to that cloud. So it's very quick at giving you that. We also see that there are signals here, arrows, up and down arrows. And what those are doing is showing you where not just the price is above the cloud, but where the crosses, the TK crosses occur as well in those particular directions. So you can quickly see where those crosses would occur in relation to that effective trend. But if you were to just leave it like that, you still have to try and count backwards and forwards around this. You'd still have to think, well, if the price is here, where exactly is the, am I supposed to be looking for the Chiku Span? How far forward am I looking for the Kuhmo? Fortunately, that's all taken care of here in the Expert Advisor. Now, the Expert Advisor here will actually analyze the entire Ichimoku method for you, and it will actually do this for any bar inside this chart to give you information so you don't have to do any of the counting forward and back. And what I mean by that is, if you'll notice, we have actually 6 main signals that are here, TK cross and the price to Kuhmo relationship. We've already talked about those. It'll also show you about what the current Kuhmo direction is, whether it's bullish or bearish, what the future Kuhmo direction is. So this right here would be current Kuhmo, and this area out here would be future Kuhmo. It gives you information about Chiku Span's relation to the cloud, again acting as a filter, and the Chiku Span's relation to price, also acting as a filter. So with this, it will go ahead and calculate the backwards areas here for you. It'll also calculate the forward area and the current information, and it does it immediately. And because of this, it makes it very quick to learn the Kuhmo or the Ichimoku method so that you can get used to trading with it. And how it works is, if you notice, I can go ahead and click and change which bars it's being analyzed on. A lot of these are very similar, so we're going to come to change here. So if you notice this bar here, we see that it gives bullish information, but it quickly also tells us that our TK cross is bearish. If we look right here, if we go forward slowly, we can actually have it evaluate every bar in the system for what's going on that bar. Here we still have bearish, and the next bar now says that the Chiku Span relation price is neutral and a trade entry is not recommended. If we go to the next bar, we see that it's now been changed to bearish. And we can continue to the next bar, and it will go ahead and evaluate and give us the updates and give us the information. And now we get all bullish across the board. Now, it's not required to have everything be bullish, but it lets you know which signals are being generated. The top two right here are the main ones you absolutely want to have in the direction. Either both of them be bullish or both of them be bearish. And then the other ones can go ahead and be confirming indicators of those. But as you'll see, as soon as everything turns bullish, we suddenly start getting a nice, good trend. Everything starts pushing up. And the nice thing about Ichimoku Master is, like I said, you can click and have it analyze any bar in the past, so you can learn that Ichimoku method and understand why it was doing what it was doing. So along with doing that, remember I said this is the complete version. In the complete version, it also is going to go ahead and help teach you about the Ichimoku method. And it's going to do that with each of these signals giving information about them. This black area here is going to be fixed. It's going to be the same information each time, and it's going to pretty much be explaining what that kind of signal is. The blue area here, however, will be information specific to whatever bar it's being evaluated on. So you can go ahead and learn from this the Ichimoku process, bar by bar, as it gives you updated information as to what it's all meaning and why it's making the decisions that it is. It then takes it down and shows you what stop options are available. Now, one of the things about Ichimoku is it doesn't have any fixed exit criteria, but what we've done in Ichimoku Master is done what most people are doing, and that is letting you see what kind of different stop-loss positions exist depending upon how far away, whether the price is above or below the different positions and what's available. So it already takes into account and shows you which ones would be available. So, for example, you don't see a Kaijin-sen stop here, which would be a tight stop, because Kaijin-sen is, in fact, inside of the Kuhmo. So if it were outside of the Kuhmo and above and price was above it, then we would see another stop option available here, but it's not. We could, for example, though, come here and see that a Kaijin support is available for the stops as well. We've got our tight stop being the Kaijin-sen. So, looking at all this, this is a very quick way to quickly evaluate what's going on. But we also understand that a lot of this information can get fairly repetitive, especially if you've read the description for the TK signal 50 times, you probably understand it. Once you're comfortable with understanding that, you can change to the next level. What we're going to do is we're going to attach the next expert down.
You want to take a couple questions?
Let's see. Yeah, does anybody have any questions at this point?
Yeah, we have one. And I think this one is just a matter of scrolling out a little bit. Robert's going to go cough a little bit for a second. He's recovering from a cold. It is that time of year, to be frank. But Caesar asked, why is the Kuhmo not a different color after a Kuhmo twist? And I think that, where is my mouse over here? And I think the appropriate answer to that is there isn't a Kuhmo twist on this chart, right?
Well, there's a little tiny bit one here, but it's hard to see. But if we move back, excuse me. we can see that the cloud actually does change color.
Yeah.
So the indicators that make it, the upper and bottom, Chiku Span A and B, are a consistent color, but what fills in for the cloud does change colors.
Depending on whether Chiku Span A is on top or on bottom. Yeah.
Correct.
So it will change its color after. And another just comment from Lib. She says, this looks great. I hope it's a she. Okay. Otherwise, I apologize. I can't see you. But she said, this looks great. Consolidation is what the market is said to be doing 70% of the time. I think what she's trying to say is this is a really good time, a good way of identifying when the market's breaking out of consolidation.
It really, or showing you when it still isn't a consolidation. And so, for example, if we go ahead and scroll back, we'll see where the price comes inside of the cloud, and that's certainly a time when you would not be trading, because that's exactly what it is, that consolidation, that equilibrium time. We can see even something like this where it'll come and break apart, come out, and then the cloud will come up and join in with it. And basically when we see that the price is hovering around cloud prices, we don't want to be in it. That's really the whole point, and a big aspect of the whole Ichimoku process. So that's actually correct in that. So,
can you repeat the time levels of each line?
The time levels, you mean as far as the number of periods?
I think what he's asking is kind of the calculations for the
lines. The Tenkan-sen is 9 periods. The Kaijin-sen is 26. The Chiku Span A is the Kaijin-sen and Tenkan-sen midpoint, shifted 26 periods forward. The Chiku Span B is 52 periods, shifted forward 26. And the Chiku Span is 26 periods shifted backwards. But now, one of the things, my understanding is you actually, in your PowerPoint, you have a lot of the stuff available, and people could get this from you. Is that correct?
Yeah. If you want, in fact, one of the things that was kind of advantageous for me is, as we said before, Robert kind of developed this, and he kind of brought it to us. And so what I had to do when I kind of recorded the video for this is I went in and kind of said, okay, here's what a Tenkan-sen is. Here's what I was actually kind of did quite a bit of research, and I took notes of those. So if you guys want kind of a PowerPoint, it could be a pretty good guide for you in terms of understanding what the indicators are and what the crosses are and kind of what the more important buy and sell conditions are. So if you want a copy of this, you can email me. You have my email address. You just have to reply to the invitation for the GoToWebinar, and it should come to me. And I'll type it in the chat as well. Lib has confirmed that he is the appropriate word.
Okay.
My apologies, Lib. I can't see it. I made a guess. It was a bad guess because 80 or 85% of our webinar attendees are statistically male. So I should have just off of that went with that gut feeling. But my apologies. There are a few more questions. I am going to chat in my email address real quick right here, and then we'll read another one. Okay. Send. James asks, so if I understand, so long as the lines are above the cloud, that is your buy or hold signal.
The two main things is that the price needs to be above the cloud, and then you have your Tenkan-sen be above your Kaijin-sen if you're looking for your long signals. If you're looking for short signals, you want to have the price be below the Kuhmo, or below the cloud, and then you also want to have the Tenkan-sen be below the Kaijin-sen. So there are times when the price may be, say, above the cloud, but the Tenkan-sen can still be below the Kaijin-sen. You want to have it where all of those things are combined together. And that's what Ichimoku Master does, is it shows you when they are together. It lets you see when those pieces exist. And that's why I was pointing out over here, you can have this point where the TK cross is bearish, but the price-Kuhmo relationship is bullish. Well, you've got competing signals there. So just because of these two alone, you wouldn't go ahead and take that trade. There really isn't a trade to take. You would want those two to absolutely be in the same direction. The rest of them can kind of be somewhat variable, though there are the parts when they come up neutral, they will tell you that not to place a trade, because certain indicators in a neutral position act as those filters, and it will take those out for you.
Do you mind if I say a few things about the cloud as
Sure,
well?
absolutely.
So the Kuhmo, or the cloud, basically is a level of support and resistance. You can kind of get a good idea for a future direction of the market by looking at the future cloud. But the other thing is, the other thing that I kind of learned while I was reading through this that might be helpful is the wider the distance between the top and the bottom of the cloud, the more valid that support and resistance will be. So in other words, when you have a signal like what happened right here, and the cloud is wider than normal, there's a stronger likelihood that that's going to bounce off of support, or that this cloud is going to hold. Whereas where you kind of get a skinnier cloud, it has less validity. Is that a good way to explain it?
The thinner the cloud, the more all the components are coming together, and so that's when you're starting to get into flat lines in your price and in your behaviors. Now, you are going to end up having some consolidation as the cloud gets higher, typically, and that's fine as it's moving up. But once the prices start to narrow out and you've got this really tight cloud, that's really a good sign that it really doesn't have any action where it's going. It's pretty flat line. It's that consolidation.
We are getting a ton of questions.
Well, how about before we answer the rest of the questions, we still want to answer all of them. Let's go ahead and finish some of the stuff so we can see what's going on. I said that there were other, we had two other expert advisors here. And this one right here is going to be that one that we call the description free. And what we're looking at is we see it's the same as the other one, except it had that description of what the signals were removed. The reason why is because once you've read it 50 times, you don't need to read it again. But you still might want to have an understanding of why some particular action had occurred on any particular bar. So this information will keep changing on each bar as you get more and more used to it. Once, however, you get used to that part, we can go ahead and go to the next thing. And we want to grab here. And you can go ahead and go to the minimal. And this right here becomes the really quick and dirty way to get everything done. We can see we've actually gotten rid of all of the descriptions entirely. And then it just quickly gives you what the signals are, what the values are, and what the stop losses are. And that way you can rush through and just say, I'm just going to take a quick look. I just want to know what the signals are. I just want to know whether I should even be paying attention to this or not. And like I said, the nice thing is that once you have the understanding, you can, again, click on any bar, quickly have that evaluation done, and see exactly what's going on. And that's really a lot of the powers. Like I said, this teaches you Ichimoku methods, as well as allows you to analyze all of the indicators, just flash, flash, flash through. So along with this, though, one of the things about MetaStock's power is its ability to scan through stocks and scan through products.
You just answered 15 questions there.
Oh, really?
Yeah.
Well, that's great. I wasn't aware that we were dealing with that. So we'll go ahead and get rid of this, and we're going to go ahead and see. We actually do have an exploration available.
We ran it earlier today.
We did run it earlier today. We're going to go ahead and grab that and take a look at those results. And so let's see. Well, actually, we have the original. Can we get the report for the original expert?
No, because I never wrote it.
Okay, well, let's go ahead and rerun that. Can you run that for us?
Sure. So let's go ahead and we'll just go down to and I have a lot of scans here, but we're going to run this Ichimoku signal scan. Do you want to run it daily or weekly?
You know, we can go ahead and do daily for the moment, and we'll talk about some of the weekly aspects, but we'll go ahead and do daily for the moment. And we'll have you show a little bit more about doing a weekly, daily combination.
And down here, in case you're not familiar with MetaStock, one of the things is you can scan just about anything that you want. So, for example, if you're joining us from Asia, thanks for coming, number one. But number two, if you're interested in like Hong Kong or ASX or Indonesia or the Hanoi exchange, you can find it. You can run this scan against that market. If you're in London, you can run it against London. If you're interested here in the U.S. stocks and you just want to run a scan against all the optional stocks, you could do that. There's about 4,300 of them. I think if you don't mind, is it okay if we do a bit of a smaller list, like maybe the S&P 500?
That'd be great.
And the reason I want to do that is it just takes less time. So I'm going to come down here, and instead of doing a whole, and you can do this against ETFs or optionables, the listing categories that they have and that we get through Reuters is fairly phenomenal. But I'm just going to come down here and I'm going to find S&P 500. And the reason I like to do S&P 500 instead of a larger list when we're doing it live is it just takes less time. Okay. Over here I'm going to scan for stuff today. So we're going to use the current date and time. And here I can say, well, I want to do daily, or I want to do weekly, or do I want to do monthly. And if you want to do intraday, you can. And you can even customize it if there's not a periodicity or a time frame on here that you see that you like. You can pretty much pick anything that you want. I'm going to go ahead and start this scan. Okay, and now it's going to go through, and what this is looking for is it's going to go through the whole S&P 500 for me. You can see it's going pretty fast. It's going to look for what we call the long entry signal and the long re-entry signal.
It's looking for long entries, or not just long. It's looking for either long or short entries or re-entries. It's looking for signals that it's wanting to get to go on.
And so it's almost done. It does take a few seconds. I just love scanning in MetaStock because if you just look at this number, 90% of the stocks we're going to look at, we're not going to look at. Right? We're going to basically allow us to go in and find the ones that have an opportunity on Ichimoku now. And by default, not looking at 90% of the stocks is going to be pretty handy. So in addition, Robert's put some stuff in here to allow you to really kind of get to the ones that have the best parameters. So go ahead, Robert.
Well, yeah, exactly. Here, one of the things that we're looking at is we're looking at some aspects about it. We're looking at an exploration report, the result, and right now it just kind of looks like numbers, but it's really a lot, pretty much everything you saw in that expert advisor put out into a quick spreadsheet to sort. So what we have is whether a signal was generated and what kind of signal. In this case, a 2 means that it's an entry signal, and a 1 means it's a re-entry. That would be for long positions. A -2 would be a short main entry signal, and a -1 would be a short re-entry signal. In general, if it's a positive number, that infers a bearish condition, and if it's a if it's a positive number of a bullish condition and a negative number, a bearish condition. So we can go ahead and see, for example, the TK cross is a positive number, so that would make it bullish. And in this case, the closed Kuhmo relationship is a -1. That would make it bearish. So even though it's had a signal, it's got all these competing values here. And if we combine all those values, we actually get a score of 0. So this probably wouldn't be one I'd want to be looking at right now. However, you'll see that we can get a signal like this where we've got a cross that's positive. We've got a close to Kuhmo relationship that's also positive. A current Kuhmo direction positive, future Kuhmo direction positive, Chiku Span Kuhmo relationship positive, and Chiku Span price positive. We now have a score of 6, which is as high as you can get if you're looking for a long position. Or you can go as far as -6 for short positions. So those are a lot of things I'm looking at. I personally look for 4s to 6s or -4s to -6s, and I'm looking for shorts. But the nice thing about MetaStock here is it's not just a matter that comes up and shows you these. You can actually sort. In my case, I will do that. I'll sort by the score. So in doing that, I'll go ahead and say if I'm looking for long positions, I'll sort it and I'll find all the ones that had everything in alignment. And I'm going to want to look at those as my signals to see which ones I actually want to participate in. So how the expert advisor showed you all those bullish, bullish, bearish, bearish, this is doing the exact same thing, just in a numerical format, so you can quickly see which ones you want to be involved in. And that's the great part about working with MetaStock is, like I said, you can go ahead and an Ichimoku product or process is usually time-consuming. You've got to do all the analysis on a chart. It's not necessarily hard, but it does take experience and it takes some time. This does it all in one shot across whatever market you send it to. So it's really awesome to that. And from that, you can go ahead and open up charts or take these into other explorations. And what I will do, in fact, it's actually the way it's recommended in the concept for Ichimoku ultimately, is you would say, do an exploration on the weekly data to see what weekly components come up, and then you'd run another exploration on those results that's a daily exploration, so you can see which ones are going in the same direction. So if I were doing, I'd go ahead and, like I said, run a weekly exploration on the data, come up with a list, and from the best list there, I would then be looking for daily signals to kick in to go in the same direction. Ichimoku really is meant to be worked on different time frames together. Excuse me. So, and the nice thing is MetaStock has the power to make it so you can create those groups, those watch lists that keep you in the loop and in the action, and make it so you're not having to do all that work yourself. Really, the software is doing that work for you.
And as Saurabh makes a really good point, alternatively, it's pretty difficult to scan through multiple hundreds of stocks. He said it exactly like that, to find a trade, and with MetaStock, it just does it for you.
It just does it for you, and
then ranks them, and then grades them.
And there you are. It's ready to go. And so that way, you don't waste your time looking at Ichimoku signals that you don't really care about. It lets you know that they're there anyway. But you can see or say, I just don't want to pay attention. If it's a 2, I'll sort it and leave it around. It lets you know, because that's part of the method, is to let you know that it's there. But that doesn't mean you have to stick with those. You can go ahead and sort by all the criteria coming together.
Plus, he asked a question, and this might take us a little too far off, but if you have a multiple 6 scores in Explore for daily and for weekly and want to reduce it even further, would you recommend looking at monthly as a final confirmation?
You can look at monthly. Depends on what's involved. These days, some products are coming in and out of existence so fast that a lot of companies may not be around for using monthly analysis. It does require that you have been in business for a while for that, because it requires that you have so much information available for that company if you're doing monthly data. Remember, it's 52 periods shifted forward another 26, so right there alone you're running in the 70s. So assuming somebody's been around 70 months trading, then you would have that. And granted, a lot of things have, a lot of things are that way. But these days you do have a lot of companies that come in and out, so you might not get signals on them. But there's certainly nothing preventing you from doing that. Absolutely. Technically, according to Ichimoku, that would be absolutely valid using the Ichimoku process and concept.
And we pulled, with some examples we pulled this morning, looking at weekly and then daily, we got 4 back this afternoon.
Which, with 2 of them actually looking like...
And 2 of them looked good.
Yeah. Yeah, and ones you say, wow.
So a lot of times you can pull, I guess what I'm saying is a lot of times you can pull up a chart and just say, well, that doesn't look good. And the reason that the 2 of them didn't look good was because they were just sideways.
Even though they all had the signals in alignment, doesn't mean that, even though they were technically above their cloud, that didn't mean that just by looking at them that they were actually really in motion. But 2 of them you could tell were used to trending, and they were really used to jumping and taking direction. And so they're ones that I, like I said, realistically would have looked at taking, absolutely.
We're getting quite a few questions on intraday.
Okay.
And how applicable, I would be able to answer this, how applicable this would be on looking at, like, say, a 60-minute chart.
If you're actually looking at the expert advisor on a 60-minute chart, it's great. It's fine. The things to consider when dealing with intraday data is, first, your explorations. When gathering data, if it has to go and grab it out dynamically from the server, pull it back in, is your server or is your connection fast enough to go ahead and do that? If you certainly don't want to be evaluating the entire stock database every 20 minutes in an exploration. It's just not going to be realistic.
In that type of a scenario, what you'd probably do is run a daily scan.
To look for the ones you want to stay with.
Save the 6s and the 5s.
Correct. And then go ahead and have those be your intraday charts. Now, one of the things is that, remember, it is a trend following system. And as you get into finer and finer detail, a lot of the trends don't seem to necessarily hold true. So if you're working with like really low price stocks, you'll often see a lot of bouncing back and forth, but a lot of that bouncing back and forth can simply just be trading between the bid and the ask price. And that really doesn't necessarily have a lot of weight. The other thing to consider is, how much you're paying for your bid-ask spread if you're doing it on stocks. I use Ichimoku a lot on 1 hour charts. That's one of my favorite things to do when I'm doing foreign exchange. So yes, it absolutely works in that. But the smaller the time frame you get into, you can still get the signals, but remember you're dealing with smaller amounts of data, and so your spreads can cost you into your profits. But as far as its ability to generate signals, it's usually pretty good. You might want to go ahead and change some of what you're considering to be valid criteria. But as far as the product and being able to process that data, it works great. And like I said, certainly 60 minutes is something I use all the time. It's actually where I live. I don't usually live in the daily realm. I stay in 1 hour charts.
Awesome. That's cool. I don't have the time for it.
Yeah.
Really, it's literally it. Plus, yes, the Ichimoku method has system testing. Do you want to talk a little bit about that?
It does. Now, one of the things is we have put the systems in for people. I personally don't necessarily use them or recommend them, and the reason why is because the Ichimoku method doesn't have a consistent set of stops. That being said, we've gone ahead and put some of the basic stops for you to go ahead and check and work with anyway. So yes, it does come with system tests, and Jeff will show you a list of what the product contains on a slide later. But the nice thing about Ichimoku Master versus a lot of the other products that are out there is that we've also opened up our code for people who want to go ahead and do development with it themselves. We have it so that you can access not just the Ichimoku indicators, but you can actually access our signals. So you can go ahead and write your own system tests as well, and you can change and create rules for how the stops are going to work, and you can design the Ichimoku method that actually works for you. So,
RC asked a question that I don't think we want to answer. So I'll also go ahead and say it. Being more clear, using stocks on a daily basis, what percentage of Ichimoku trade signals are positive or work out profitably? And there's actually a legal reason I don't really want to answer that.
Not only, I mean, it really also depends on what you're trading. It's always subjective because you always want to look at the chart before you go ahead and enter in. And it's like what we were talking about today. We came across that signals were actually generated, but visually looking at it, you can look at it and say, you know, it's like, even though the signals are there, I'm still not going to take it. That would just, you can see it's been moving sideways, and there isn't enough of a convincing thing for me to go ahead and want to jump on that trade.
Obviously, the results with a stock like Apple is going to be a lot better because it has a tendency to trend.
Yeah, it's incredibly trending because it just doesn't stop trending.
Whereas we looked at a couple losers today that looks like they were range bound for like 2-3 years. So.
But they also were very obvious, and that's the nice thing is because when you look even with the Ichimoku stuff on it, you could see very blatantly that was not a stock that was going to go ahead and take into it well. And so, you know, you don't just blindly trade whatever comes up on the list. You never should do that no matter what. But this makes it so that you can quickly create a group of stocks that sits here and say, I can look through these stocks, these 20 stocks in the next 4 minutes and know exactly what I'm going to be doing tomorrow because these ones are really obvious and these ones are really obvious not to.
And the other thing is, too, you know, we offer, when we do add-ons here, we offer a trader's dream when it comes to risk to reward. Mm-hmm. If you like kind of like what Robert is talking about, and you want to try out the product, you can try it out. It's $300. We'll talk a little bit about pricing later, but it's a one-time cost, $300. If you don't like it, we give you a refund for $300. I should be clear. It's actually $299.
Well, it's if you get it through the webinar. It's $399.
It's normally $399.
Yeah.
It's $299 here. You get a month to evaluate it. Our feeling is it's going to help you learn the Ichimoku method. Mm-hmm. I've seen courses out there that are $6,000, $7,000, $10,000 that all they're teaching you is a very specific part of the Ichimoku method. This kind of lays everything out for you, helps you learn it, and then also helps you implement it on a going.
It helps you master Ichimoku.
So maybe we should go to that slide since we're kind of talking a bit about it, and we are kind of running a bit low on time. I had to say I like the format, and I wish all of my speakers could come and be in the office with me because I think it works pretty well. But let's just go back over to this slide scan, and I'll just kind of skip through kind of the stuff. And we'll kind of talk a little bit about what's included real quick. Ichimoku, you've got the expert advisors, which Rob showed, and to kind of sum up what those do for you is those paint the bars. They put the buy and sell signals, and they give you those descriptions that kind of break down those 6 major things that Robert was talking about. These are the 6 that I'm talking about. Okay, they kind of break those down for you in their bullish, bearish relationships. They have the black part that actually explain them to you, and the blue part that tells you exactly how it relates on the chart right now. Okay. In addition to that, you have the indicators. You have the scan that we showed you that'll go through the market and allow you to find the good opportunities, the 4s, the 5s, the 6s, and then the system test as well. And all of that is only like $399. It's $299 on our special webinar price that we're doing today. It includes a 30-day money-back guarantee. And we're also going to include an advanced training class. Now, this is a class that we recorded over the summer.
We recorded about 2 months ago.
About 2 months ago.
It has an additional indicator in it that's I call it my secret sauce, because that's always like the thing of what a secret sauce thing is. But it's an indicator that I use in my trading that I use to even cut down a lot on the whipsaws that can exist and that make it so that I have a little bit more information about what to expect in the price action. And so yeah, if you actually get it, you will be able to get to download that indicator. It will be free if you are an owner of Ichimoku Master, and it does require Ichimoku Master to run. But you also get the hour training video.
Yeah, that training is basically 2 parts. Number 1, Robert actually goes into some detail about how he actually uses it with his trading and the kind of the special indicators that he uses with it. He does a really good job of specifically laying out the methodology and kind of exactly how he implements in his trading. The second part, I actually just sat down and spent 20 minutes or 30 minutes showing you exactly step by step how to run the scan, how to run an exploration, how to open up the charts and kind of manipulate them and make them look exactly the way you want. So if you're new to MetaStock, or if you don't have MetaStock, I know a number of you said you don't have MetaStock. Number 1, I'd recommend that you try it. It's been rated the #1 product in its price category for 24 years in a row right now. And we'll give you a free trial with this. You can actually try MetaStock for free as part of this, and if you don't like Ichimoku, you can get a refund. You're at $0 basically, and you get a free trial to MetaStock as well. So if you want to take advantage of that, we do have people that can answer more specific questions. We had a lot of questions come in today that I don't think we're going to have a chance to answer all of them, but we do have staff online right now that can help answer questions or help clarify pricing, all of that kind of stuff. And you just need to go to metastock.com/saleschat. If you want to place your order, it's metastock.com/TSAICHI, Tasaichi.
TSA Ichi.
TSA Ichi. There's a few comments coming through. Do you have anything you want to add?
I think I'm good. It's been a great audience. It's been a great presentation. I'm glad that they asked some questions, and I hope we were able to answer a lot of what people had in mind.
James says, at that price, I'm in. Tell Steve to hook me up. James, you won't be disappointed. You'll enjoy it. I'll let Steve know. Let me take. Hold on, just a second. I'll just take a picture of that so that I don't forget later. What else?
There was something about the end of day data for MetaStock.
Let's see. Will this work in older versions of MetaStock? No. It was developed with the newer technologies.
Actually, I think it was 13. It's actually developed for version 13.
13 or higher.
13 or higher, yes.
So if you don't have an older version and if you've been holding off because of data, we've resolved that. You can use it with your own data feed. And that was why most people haven't upgraded. They're coming in so fast.
They are, I know. It's like, the advanced training class. We've already done the advanced training class, but we recorded it so that you would have access to it.
It's instant access. Yeah, it's already ready for you. Liv said, I loved it. He said, best explanation on Ichi I've ever heard. Good job, Robert.
Oh, thank you. Appreciate that. Let's see, looking at one about difference between trading of 5 per week and 22 per month. I have not done that work myself. I have seen about 8 different groups who have tested that, as well as trying to change the values, change the things, trying to optimize it, if you can say, for what they feel to be a better market. And what I've noticed is of each of those 8 groups, every single one of them went back and said that the values that are there work just as good as anything else they were able to come up with. So that's why I was saying it's held itself for darn near 50 years. Even trying to change it, people still go back to the defaults that were already there.
Mark asks, does it work on PCs or also on Macs? It works on Macs, but as long as you're running Windows, it is a Windows-based product. We have a lot of customers that use it with Boot Camp and Windows, and certainly with the new Intel chips well, they're not new anymore, but they've been using Intel chips for a while, and it runs really well in that type of an environment. Anita says, do you have a package we can purchase? Yeah, it's $2.99. It includes everything that's listed on your screen. Oh, that will include MetaStock and Ichimoku Master. Not put together, but we can work out a package for you, Anita. I'll have one of our reps contact you and kind of figure out exactly what you need and figure out the best way for you to do it, if that's okay. Okay.
All right.
I'm sure we missed some questions. If we did, I'm sorry, guys. Feel free to reach out to me if you need me, and our sales team as well. They're very knowledgeable about everything. You're welcome, James, for the great class. He says, great class, thank you. I really appreciate that. And with that being said, I want to thank you guys for coming. Robert, it was good to have you in the office. Like I said a few minutes ago, it's a lot funner with somebody in the office.
You got to have that band.
Maybe it's just you, though, right?
Sure.
Like we could have somebody in here and it could just be weird.
Hopefully not.
Okay, Jim, we will. I'll have somebody give you a contact. Thank you. Thanks for your interest, Jim.
That was actually, that's okay.
Okay, Anita,
Yeah,
Jim.
all right.
I'm not sure. I'm confused.
It's okay.
All right, thank you, guys.
Thank you very much for
coming in, Robert.
And thanks for letting me go ahead and show you this.
And as usual, I'll see you at the next one. Thanks, guys.